So this is Steve Wolff with our December 2021 report for the month. Last one, obviously, for the year of 2021. And it was an interesting one. Probably the biggest thing, two big things, but the biggest thing I think that happened was the policy shift by the Fed. Jerome Powell finally said, that, hey, maybe this inflation thing isn't transitory, and now they're looking at raising interest rates. And from what I'm reading, they're talking about maybe 2-3 times next year, but who knows? Could be more, could be less. But they definitely know that they've got to stop. They have to stop lowering the rates and just feeding the market this probably unrealistic position that we're in. At any rate, it looks as if that we're going to have higher rates next year. Big shift, and the result of that was that the Treasury yields actually went up a bit. Now, they had gone up back in the end of September, beginning of October. The 10-year Treasury was around, I believe, 150, 155. And then it dipped back down again. And now, because of the announcement, we're back up to, as of the end of the year, to about 1.52% on the 10-year Treasury, which is interesting because it is up a little bit from the beginning of December, where it was 1.43%. But from the beginning of the year, we were actually less than 1%. We were at about a little over 0.9% on the Treasury note, so 10-year Treasury bill. So that's quite a big jump from where we were. Now, that was one of the big things that happened over the course of this last month. The other big thing, of course, is the Omicron news. We started talking about this a little bit in the last report, but when it jumped over here from South Africa to the United States, and now we started getting it, and we saw how quickly this thing spread, I think people got a little bit spooked. And in the middle of December, the stock market went down. And then about December 18th, 19th, right around then, I guess people were realizing that from what we've read, and we think that although this COVID the Omicron is going to spread quickly, it's not as deadly as the Delta virus or the original. And that made people feel better, because in South Africa, apparently it was almost an inverted V, I don't know, maybe a mountain, that it went up real quick and down real quick. And people in this country seem to think that's what's going to happen. So they started buying stocks again. And who were the biggest beneficiaries of the stocks? It was the large growth stocks like the Apples and the Googles and Tesla and all the ones you might think about. Those were the ones that did really well. Also, the dividend type stocks did really well. And that is kind of a result of what the Fed said about raising interest rates. When they raise interest rates, people, want to be maybe a little bit more careful. Growth stocks don't get as big of a premium as they might otherwise. But the interesting thing happened is we're a little bit in a bifurcated market. If you were in the big tech stocks, you've done really well. And by the way, before I go on, I have to have a little bit of a disclaimer here. So just anything that I'm about to say or have said is strictly for informational purposes, and it's not meant to be a recommendation. So before you buy or sell anything relating to anything I'm saying about the markets or individual securities, be sure to consult your financial advisor to ensure it's the best recommendation for your personal situation, and everyone is different. So December was an interesting month. It really was a bifurcated market. The small stocks, especially the small growth stocks, got hammered. I was reading a report, this was in the middle of December, maybe toward the end of December, that was talking about that the big growth stocks were doing absolutely wonderfully, and because they're such a big part of the index, like the NASDAQ, the QQQs, the NASDAQ 100, the top 7 stocks or so represent about 50 to 53% of that whole index. So if those stocks are doing well, boy, the index is doing great. But I was reading a report that was talking about the other stocks in the NASDAQ 100, and they were getting hammered. From their highs, this was in the middle of December, this report was talking about, they said the average stock is down in the NASDAQ by somewhere in the area of 39% from its high. So you can see that that's a big drop, while some of the big stocks were doing well. Some of the more reserve stocks, the Pepsis, the Cokes, those types of companies, the drug companies were doing really well. But the reason I kind of like this, if you're investing in smaller stocks, some of these have come down to a point where they might have set up for a pretty good next year. Again, stock pickers market. Don't really know what's going to happen in the next year. I'd be surprised if over the course of the next year or two that these large growth companies continue to lead the way, but anything can happen. These things can get so overvalued that it's not even funny. Quite honestly, I think some of them are a lot overvalued. At any rate, that's where we are right now. Unemployment rate has stayed really low. The jobless claims are really good. They're really low. And the economy still looks really strong. So it's really kind of been a market that everybody wants to hate. Nobody wants to like what just happened because everyone feels like, oh man, there's so much that can go wrong. We're just going to go down in the stock market. Not so. The economy is still strong, still like where we're at, and I think January is probably going to be good, and it'll be interesting to see what happens for the rest of the year. Appreciate you listening to me, and we'll be back at the end of January. Take care.